Hello and welcome to the Gold, Goats, and Guns podcast. My name is Tom Luongo and we have a lot to talk about. It is episode 152. This is one that's been like on the burner, simmering for a while now. I've got Brent Johnson with me, the CEO of Santiago Capital, and Brent and I tried to do this last month and I had to beg off. And so Brent's graciously agreed to come back on later, which I appreciate. You might know Brent as the quote unquote dollar milkshake guy. And it's really good to have him here today. Don't really know Brent much beyond that, but that's a good opening place to start here. But before we get started, I don't speak about the pros and cons of moving to another country very often, but I know it's a big concern for many in our community. And I'm proud to say I've even helped a few Canadians expat to the wilds of Florida. So when I was recently a guest on the Expat Money Show with Mikhail Thorup, we had a great talk about this. It's episode 252 if you want to listen to it. Mikhail impressed me with his passion for freedom and finding a better way in this crazy world. Now, he hosts an annual event in October called the Expat Money Summit and invited me to speak at the event. And I'm happy to say that I agreed. So you can pencil that in. Over 7,000 people took part in last year's summit. It covers things like how to move abroad and how to legally reduce your tax bill. And they have a great lineup of other speakers, including Dr. Ron Paul, Doug Casey, Dr. Mark Faber, Peter Schiff, and one of my personal favorites, Jim Rogers, as well as experts in other fields like international law, foreign real estate, banking, and precious metal storage. Events like these, I think, are great opportunities to connect with others who have already made the leap and network for the future with like-minded folks. And this is the largest offshore event in the world today. So if you're intrigued, go to expatmoneysummit.com for details and reserve your free ticket. This year's summit will run from October 2nd through October 6th. You can use my affiliate link when you sign up. See the show notes for all the links. Okay, now on with this episode. Really happy to have Brent on the show today. Thank you for coming on. And how are you?
I'm good. Thanks for having me. As we were chatting before we started, I've kind of known about your work a little bit here and there. I'm not an expert, and I have a client who reads all your stuff, and so he's asked me many times, where do you agree with him and where do you disagree? So maybe this is an opportunity to figure that out. And if my client is out there and listening to this, then I'll ahead of time I'll say thank you for suggesting it, and we'll see how it goes.
You've been, to be honest with you, Brent, have been suggested to me as a guest for a long, long time. And I'll be honest, I'm terrible about reaching out to new people because there's, believe it or not, there's actually, and anybody who knows me well would be surprised, or at least the public version of me does not realize that I have really terrible like social anxiety when it comes to meeting new people. So that first moment of like meeting a new person in a weird setting, which is part of the reason why we do these with video, but I never keep the video so that we can, you can get a sense of what's going on here and we see each other. So, great to start in that, there. So why don't we start with this week? Because I just got done writing a private blog for my patrons this morning, in which I quoted Lenin saying, there are some years that nothing happens and there are some weeks when years happen. And I really think that this week, this is actually really fortuitous that you and I put this off for as long as we did, because I think this moment in time is actually a perfect opportunity for you and I to discuss what's going on.
Sure.
So we've had a number of things happen in this week, right? We've had the Bank of Japan finally, tell everybody that, yield curve control is on the way out. We've had, there's the downgrade of U.S. debt. There's the threat geopolitically of France effectively losing its AAA status if they lose control over Niger. Like there's all sorts of things happening. So I don't know where you want to start on this, but in all of this, of course, I don't think you're surprised if I get you properly, or I understand you properly, that the dollar immediately broke out to the upside because of this. So let's start there.
So first of all, that's a good setup, and it is a good time to talk. And I'd say you could argue it's been for the last 20 years. You could argue it's been building for the last 15 years. You could argue it's been the last 5, and you can argue it's the last 5 days, right? Mm-hmm. But everything has kind of been building up to what we've been experiencing, let's say, for the last year or two. And it is coming more and more to a head. And let's address the debt downgrade right off the bat, because I think a lot of times when people see a headline like that, especially if they have not worked in the financial markets or have not, had experience dealing with how securities are priced and how they trade, would immediately think that is a horrible thing for the United States. It's a horrible thing for the economy. And as a result, it's a horrible thing for the dollar. And this is further evidence that the dollar is going to lose its reserve currency status and it's going to get inflated away, and it should be down 5% today. And some of that is true. And I'm not saying that you should ignore it when you see that the US debt has been downgraded. But there is kind of a counterintuitive reaction, because when debt gets downgraded, typically the bonds that refers to fall in price, right? They're not worth as much because they get downgraded, so they fall in price. Well, what happens when a bond falls in price? The yield goes up. You get paid more for owning that bond because now the price is lower. Well, when you then translate that into a currency, especially a currency which everybody already needs anyway, and already has an incredible amount of demand for it anyway, regardless of whether they want to or not, and then now you get paid more to hold on to it, it actually makes the price of the currency go up. And that's what and that's exactly what we saw. And so that's a lot of times when, this happens a lot on Twitter and social media, I'll get these, the US is, running all these fiscal deficits, and they've got the budget deficits, and they're never going to be able to pay off their debt, and the bonds are going to become worthless. And I say, okay, fine. And the dollar's going to go to 150 as a result because of everything that I just said, right? So I don't disagree with the problems. I don't disagree with the issues that have been raised. I disagree with the conclusions that are immediately drawn and that are often incorrect. And part of the reason I push back as hard as I do on social media is, one, to have a little fun, but two, to also try to educate some people that just because you think this is going to happen doesn't mean it necessarily is going to happen. And these are the reasons why. So I hope that kind of helps explain that issue itself. And maybe that's a good place to start from there.
Sure. I would just add to that. No, I agree with you completely. And it makes perfect sense. By the way, for everybody in the audience, when you sell a US Treasury, you buy dollars. Now you can immediately, that's the first phase of the transaction.
Right.
You sell a bunch of treasuries, the yield goes up, the price goes down, and you're now sitting on a bunch of dollars. Now you can turn around and decide what you're going to do with those dollars and flip them into something else. You can flip them into euros, you can flip them into yen. I don't know why you would, but you could.
Right.
Especially, but hey, that's like the bare mechanics of the process, right? So I was not surprised to see the yield curve blow out to the upside. As a matter of fact, I wasn't even surprised by how the yield curve reacted completely. We saw a sell-off in the long end of the yield curve, and we saw people flip their long exposure, their duration exposure to the US dollar in the form of 10s, 7s, 10s, and 30s turn into people flipping those dollars back into 1s, 2s, and 3-month bonds. Like, if anything, because what you saw in the yield curve is that the long end blew out, and then the short end of the curve flatlined, and that makes perfect. And again, that makes perfect sense. It makes perfect rational sense. People, if they're not sure what's going to happen to the dollar long term, well, you get out of duration and you get into immediate, and that also makes sense.
And the other thing, I think that people, and I'm not exactly sure who your audience is. I have a pretty good idea, but I don't know exactly. But I'm guessing that a lot of your audience is very interested in this stuff, but perhaps hasn't been an operator inside.
That would be fair. That would be fair. Okay, that's not to say that we don't have patrons.
Right.
We do.
Right.
And they're invaluable to the community, by the way.
Right. No, absolutely. And then again, this is kind of why I am as, I don't know if you want to say active on social media as I am, is because I really want to reach those people. I grew up in a little town in Nebraska. My parents didn't even have brokerage accounts. I didn't know what a stock and a bond was until I was in my first interview, and they asked me, and I said, I don't know. So that's the world that I come from. Those are the people I grew up in. Those are the people that I honestly trying to help educate here, because it's not that they're not smart people. They just don't have the experience in it. And so the other thing that I would say is, even if you think it is perfectly logical to get out of the dollar and go buy gold or go buy land or whatever it is, it's not that you're necessarily wrong, but you have to figure out what's actually going to happen in the financial markets. You have to put yourself in the other people's shoes who are actually doing the transactions, because it doesn't really matter what you think. It doesn't really matter if you're logical. That other person who's actually active in the markets has to be intelligent, has to be logical. Mm-hmm. Not only that, but those people have rules in which they have to operate. if someone at a big pension fund sees this headline that the US debt is downgraded and he wants to sell all his bonds and go buy gold, he's not allowed to do it. So even though he wants to do it, he can't. And if he wanted to, he could go to his investment committee and he could suggest it, and they will probably tell him no. But then he could work through the investment committee, and maybe after a year and a half of meetings every quarter, you could get them to buy 1% of gold. But these are the types of things you have to think about when you figure out markets. Is you have to put yourself in the other person's shoes, but then you have to stop thinking like yourself, and you actually have to think like that person thinks, and then figure out what's actually going to happen. And I think that's very hard to do initially. It was very hard for me to do when I first started in this business. I still struggle with it a little bit, to be honest. I've gotten better at it. But I think that is it. Once you figure that out, you're ahead of everybody else. Now, whether you're an expert or not, that's yet to be determined, but you are definitely ahead of everybody else once you have the ability to remove your emotion from it and just think of it in that perspective.
No, this is I'm really glad you brought that up, because this is one of the things. It was a hard fought lesson for me. I remember screaming the day that gold hit 1033 and then collapsed on some news. It was in 2008. Oh, it was on Bear Stearns. Gold hits 1033. Bear Stearns was vaporized, and I'm literally screaming at my quote screen, going, "What are you people doing? Why are you selling gold at this moment in time? Why are you buying the dollar?" And I remember that, like, having that kind of existential crisis moment back then. And thankfully, I wasn't a public commentator back then. I was still a novice, wet behind the ears, learning the craft, right? And so, yeah, because that would have been the end if I had pretensions of being an early YouTuber, for example. If you think about, you think about the arc of your life. I was a research chemist at the time, dabbling in markets. It didn't matter. I wasn't even thinking about this. But, if you imagine if you were, early on as a YouTube quote unquote influencer or whatever, out there doing the thing, and then you have a meltdown like that. Well, that's the end of your career. You're done at that point. And not only are you done, but you're done in a way that is irreparable. And I know, and I'll be honest with you, a lot of people who were prominent people back then did not understand what was happening. And I kept looking at this, and I was one of them, but I wasn't prominent. I was trying to learn. So now here we are 15 years later. Jesus, I have no black hair left, right? You think about that and you go, okay, so how are you going to get people through that? Because now you got to think in terms of, who are your clients today? Well, they're all the people that were you 15 years ago. Right. And so now you're trying to help them get through the process, and you teach them as you continue to learn, because the whole process of what we're all doing is trying to get better in real time.
Oh, absolutely. Honestly, I've spent the last 15 years trying to figure this stuff out. And I really, really got deep into it in the last, call it 10 years. And everything that I started researching has started happening in the last 5, right? So all of my theory has started to kind of show up in real life, but I don't claim to have it all figured out, but what I do have a willingness to dig into things. I do have a willingness to try to figure everything out. And I have a willingness to share with people what I'm learning and what I think. And if I get it wrong, I actually don't care. A lot of people are scared to share what they are finding because they don't want to be perceived as being wrong or saying something wrong. And, if you want to disagree with me, it's totally fine to disagree with me. It doesn't bother me. But you're not going to stop me from telling people what I think is going to happen. And so I actually enjoyed the whole process, but it is about learning. And, part of the reason, you come on these shows and you interact with people on Twitter and you go to conferences is a lot of times people don't influence you or change your mind, but every now and then they do. Every now and then there's a point brought up or something that you haven't considered, and it makes you kind of go back and think. And, that's where the gold lies, so to speak.
No, I agreed. And I'll be honest. One of the things that for me, I can tell you that what happened for me was really simple. I would just sit down. I used to do live streams twice a week, right? And I would sit down with a very small group of people, and we would just throw scenarios out of what we thought was happening on a biweekly basis vis-a-vis the headlines, right? And I would just go, okay, well, scenario one, it looks like this. Scenario two, it looks like this. Scenario three, it looks like this. Now let's assign probabilities to which ones of these do we think are going to come through? And this is the process. I remind people, and I don't like to do it often, but I remind people that I come from a science background, a real science background of actually having to put hypotheses on the table, test them in real time, get data, and then go, oh, that idea was terrible, and then go, oh, but I learned this, and this from the process. And so, being unafraid to be wrong and just go, look, I'm happy to be wrong about this, but this is what I see. And if I am wrong about it, well, what does that tell us? It tells us that we learn something new and we fail falling forward, as opposed to being afraid of looking like, oh, we're going to lose our influencer status or our street cred card or whatever the hell it is.
Our street cred, right?
Shit about that. All I care about is like trying to figure out what the hell's going to happen tomorrow. Because we're all working with imperfect information. We shouldn't be so, we shouldn't be so bound up in our own either head or our own ego about this. It's like, look, I'm going to be wrong. And hopefully I'm just not wrong more often than I'm right.
Well, that's the other key part of it is, if there's any young person, in the business that's listening, or it doesn't really matter what business you're in, you are absolutely 100% going to be wrong, right? Mm-hmm. I mean, you absolutely are not going to get everything right. Even Stan Druckenmiller will tell you that he's made millions of mistakes and he only gets, he probably gets a lot more right than everybody else, but he would tell you that, maybe he gets 60 or 65% of his calls right. The key is to make money when you're right and not get killed when you're wrong. Right. And there's many different ways to do that, but, don't be afraid of being wrong. Just make sure you don't get killed when you are. That's probably, one of the truths that you can like pin up on your wall and, just stare at it every day.
Yeah, I agree completely. And then it gets even murkier when we start trying to figure out. For me, I realized very early on that you can't just analyze these systems, with the situation strictly on the capital markets and what they're doing. Like the capital markets are a reflection.
No, absolutely.
They're a reflection of everything else going on. And most importantly, and I say this all the time, but I know I'm almost positive you will agree with me on this, which is that we live in hyper politicized markets. They're hyper financialized, but they're also hyper politicized. And then because of that, price discovery is almost impossible. And
well, free market price discovery is
free market price
is impossible. Yes,
right. And so now you have to be a political tea leaf reader as well as a strategic thinker from a political and geopolitical level, as much as you are a guy who's saying, well, I look at the fundamentals and the supply and demand fundamentals of oil, for example, and go, that's nice. This is what they look like, but at the same time, this is the political backdrop of the most political asset in the entire world.
Well, and that's really, really, to be honest, what I have tried as hard as possible to point out to people with my whole dollar argument. And the first thing I should say is, for those who have heard me before and know about my quote unquote milkshake theory, I'm sure many of you are sick and tired of hearing that word. I actually tend to get tired of it from time to time as well.
Fair enough.
But part of the reason I talk about it as much as I do and I pound the table on it as hard as I do is not because I want everybody to believe in it and go place money on it and say, wow, you're a really smart guy. The main reason I pound the table on it as hard as I do is I see so many, not necessarily bad arguments against it, but just uneducated arguments against it. And I feel like on social media, people will see an uneducated argument that they emotionally like, and they will automatically assign 100% probability of it happening to it. And what I try to do is say, hey, I understand your emotional feelings about it. I actually tend to feel like that myself, but feelings don't have much to do with this, right? And you need to remove those feelings from it. And this is how the system actually works. And these are the things that perhaps you don't know. And a big part of that is politics. Now, for one, I don't like using the word hate, but I have a strong dislike for any politician. In general, I don't think that they are high quality human beings. Now, I'm sure there's a few exceptions out there, but in general, I feel pretty safe saying that. And so in many ways, I hate having to deal with it. But it is impossible to deal with global financial markets and not deal with politicians, because governments don't like free markets. And so the idea, when I will get into debates, or when I will be explaining something, and somebody will say, well, yeah, that's only because the US forces them to, or that's only because of the legal tender law, or that's only because of this, or it's only because you bombed them, whatever it is. And I say, well, yeah, but shouldn't you factor that? If you've got your money on the line, shouldn't you factor that political influence into it? And so that's the thing, which I think the point you were making is that, you know, markets are not free to act as they would without external influence. You might like that. I might like that. It's never happened, and it's never going to. So kind of, you know, if you want to make money, you kind of got to get over it.
Yep. No, absolutely. And this is part of you know, I go on Bitcoin podcasts, for example, and I get lambasted because I go in and I tell the Bitcoin maxis or the hyper Bitcoiners, I'm like, guys, I've been here. I know what you look like. You look like gold bugs 15 years ago. You're no different. You don't realize the forces that are arrayed against you. It's not about math. Sorry, Spurg boy, but it's not about the math. It's about, you know, things that are far bigger than that. And, you know, you're going to have to, like, it's not that the math is wrong, but what you don't know is when the math is going to be right. And that could be so far in the future that it doesn't matter. Moreover, and there's a point that I've made many times, and it's the same thing with gold bugs. It's like just stacking sats or just stacking coins and then checking out isn't building anything, isn't fighting for the future that you want. All you're doing is sitting back and, like, I hate to say it, like John Galt going, yep, I'll just wait for it all crash and then I'll swoop back in. Like, who wants to be Dagny Taggart? Who wants to be John Galt? And you have to have a little bit of both in you in order to get this stuff done. If you want society to not collapse, and you want your children to grow up in a world, you know, that doesn't suck. Like, because otherwise you're just waiting for the suck to maximize before you move forward. Yeah. By the way, Brent, I'm completely blunt, and you are allowed to be as blunt as you want.
Yeah. No. It's all good. Well, and somewhat related to that is, you know, the whole Bitcoin fixes this. I think when you use a term like that, it's important to say it fixes on whose behalf. In other words, it may fix it from an individual's point of view. It does not fix it from a government's point of view. And the reason that the governments don't like it is they don't want it to be fixed.
Right.
That's the last thing they want. So unless you can knock the government off and put your people in power, and your people in power aren't like every other person in power and doesn't want to hold on to that power, but at the same time is strong enough to withstand everybody else who wants to take their power, and then they institute a system like that, then maybe Bitcoin fixes it. But it's about much, and I know some people say, well, the math will eventually win, so all we have to do is sit there and wait. Okay, perhaps that's correct, but that could be 3 years, it could be 30 years, it could be 300 years. And in the meantime, people have to live their life. And it's one thing to focus on the destination, but some people, you actually have to walk the road, you know?
Yes.
And so that's where I try to kind of help people walk the path, as opposed to just focus on the destination. And I'm not saying you shouldn't understand where you're trying to go. I'm not saying you shouldn't have a goal. And in many people that I disagree with, we actually agree on the destination. But the problem is if you walk down the wrong path to get there, you may get blown up along the way, and you may not make it to the destination.
Look, so, I have, yeah, no, you're absolutely correct. My long-term readers, right, and listeners will hear, they've heard me say this 1,000 times, and I've said it doesn't, what matters is actionable information in real time, you know, or even in, you know, based on whatever time frame your time horizon is. If it's, you know, next week, well, then you're a Momo monkey. If it's 18 months from now, you're a swing trader. If it's 5 years from now, you're an investor. And, you know, if you're trying to set yourself up for your family for the future, you know, you have to marry your investment thesis with the time frame of what it is you're trying to accomplish. And you can't just sell people pablum of, well, just stack gold, everything will be fine in the future because the governments are all going to fail. Like, no, that's the stop clock is right twice a day argument. I'll be honest. I'll name names. I'm so tired of listening to people like fall down the Pied Piper hole of somebody like Peter Schiff. Like dude's been saying this shit since 2005, and none of it has been correct. None of it's been correct. And I'm
Well, and
at the
yeah,
same time, I'll get angry. I get angry at watching perma bears about the stock market, for example. Like they're not getting it. Like I wrote a piece, the piece I wrote this morning. I had so many headlines I could have titled the piece with and linked into, and I linked into the article this morning on Zero Hedge about going over the H.4.1 report from the Fed and coming to the conclusion that the BTFP's balance going to $106 billion was the lead, not not that QT is ticking away in the background at $100 billion a month, not that, we're going to have proper rotation out of reverse repos and into money markets, not that, none of that stuff. Are you kidding? That's a rounding error. The BTFP at $106 billion is a rounding error on bank capital in the United States. It's literally nothing. And yet this is their lead. That's because Zero Hedge needs to be right about this, not and I have to signal. I hate to signal them out on this, but it's so very clear that they have a thesis. That thesis is wrong, and now they're just frustrated. When the reality is that it's far more complicated. That we're actually closer to beating these people than they think, but we're going to do it differently.
Well, here's the interesting thing for me is that I actually like the people will probably find this funny because Peter Schiff and I actually have a little bit of a, I don't know, friendly rivalry, let's call it. But I know I've met Peter. I know Peter. Peter and I get along just fine. We disagree on markets, but I actually like to hear what he says because he does have a big influence. And so I am actually curious what he has to say. I read Zero Hedge every day because I think that they're willing to say things that other people aren't.
I agree.
I'm willing to talk to people that. So I actually like those messages, but what I would say to other readers that also like listening to those outlets or talking to those people is just because somebody says something doesn't make it true. And it's the same with me. Just because I say something doesn't make it true. And so one of the things that's happened this year that I've actually had a lot of fun with it. People probably think I'm being a jerk, as they typically do, but is the BRICS gold-backed currency that's now going to launch in the third week of August.
Right.
It started off at the beginning of the year that everybody was going to de-dollarize. Then it came out that they were going to launch this gold-backed currency and the dollar was going to fail. And then it was, well, they're not going to launch it right now, but they're going to announce it. And then, well, they might not even announce it right now, but they're going to talk about it. So there's been this big arc of where it was going to be a dollar killer. And now as we get closer, they're starting to walk it back. But what's funny to me is about a month ago, it was the Russian embassy in Kenya sent out a tweet about this gold-backed currency that the BRICS was going to launch. Think about it. This is the Russian embassy in Kenya tweeting about monetary policy for 5 different countries, as if it was an absolute done deal. And many, gold outlets and libertarian outlets and anti-US dollar, anti-US hegemony grabbed that and breathlessly wrote report after report and tweet after tweet that this was another nail in the US hegemony coffin. This is official. This is the official announcement from the Russian government. And so, again, it's not that you don't pay attention to it. It's not that you don't listen to it. But you don't have to take it as absolute fact. And subsequent, there's been several Indian politicians, even Russian politicians, and I think there was someone from Brazil, have subsequently come out and said, hey, this is not even on the agenda. We're not launching anything. Right. Now, those got no coverage, right? Of course. And again, maybe you don't take those at full face value either. My guess is they are going to talk about it. They've been talking about it for 15 years. I don't know why they wouldn't talk about it at this meeting. It would be more weird if they didn't talk about it than if they did. But for them to be able to come out and just launch it, and then not only just be able to launch it, but actually implement it. And then not only implement it, but get everybody in all of these countries just to automatically buy into it. You really have to think through these things rather than just blindly accepting them as fact. Because if Joe Biden came out tomorrow, or if Donald Trump came out tomorrow, or whoever it was and said, we are now going to use seashells instead of dollars, just because those politicians said it doesn't mean that the business down on the street is going to accept those corn kernels when you walk in and try to buy a Coke, right? So you've got to get the market to buy into it as well. And I think that's that is probably the most I don't know, infuriating but also entertaining part of social media to me is the willingness to just grab the headline and accept it as fact.
Yep. No, it is funny. We did a, I know you've been on Palisades Gold Radio many times, and
Yeah.
I was just on, we did a three-way between Tom Bodrovics and Vince Lonchi and myself, so VBL. And we went over all this and we talked about the process by which they would actually have to build the infrastructure to make to reintroduce gold into the monetary system this way, and how that has to do it. And Vince went on a 15-minute. It's in there. It's the opening 15 minutes of part 2 of that, which is the episode 150 of this podcast also as well. And I'm sitting there like just listening, because there's Vince doing the thing, like literally laying out in 15 minutes how you have to build the supply chain, how you have to build all of the infrastructure in order to handle that in one country. And then you have to be able to do it in another, replicate it all the way around the world. And so the system is clearly, they're moving in this direction. My final word on whatever it is that they're going to announce, at the most that they are going to do is they're going to move to a system where they use dollars to denominate the trades, and they're going to settle the trade imbalances in some form of digitized gold ledger entry, and that's as far as they're going to go. It's just that simple. They don't need to go any farther than that, but they'll still use dollars to denote whatever it is. They'll denote the price. They'll do all the currency conversions behind the scenes, and then they'll have a gold, accounting system, ledger system, and they'll settle up once a quarter or once a year. And maybe some physical gold will move around the world, but most likely not. And if it does, it's going to look an awful lot like the vaults over at the LBMA or the COMEX.
Right. Yeah, exactly.
And that's what's going to happen.
Who's going to run the vaults, right? And
right. Who's going to run the vaults, or who's going to move the,
who's going to place the initial deposits into the vault. So there's
all this stuff that has to happen. Right. And there has to be vaults local in all of these places. And so that supply chain, and then they all have to be trusted. And then somebody, like, it's a lot of work, and it's a lot more complicated. And it's not saying that it's not happening. It is happening, but it's going to happen at whatever pace it needs to happen. And the more the United States weaponizes the dollar to try and stop this, the faster that will happen, because it'll be in their best interest. As Vince and I put it to each other, the convenience premium of using the dollar, as that goes away, sure, the dollar will, fall in these people's estimates, because it won't cost them as much to use a different currency. Once the convenience premium turns negative and it's more expensive to use dollars than it is to use, I don't know, Indonesia rupiah, well, then people are going to use Indonesian rupiah. But until that happens, the dollar is still going to settle an awful lot of trade. And like, I got news for everybody. Was it 88% of all trade is still, settled in dollars?
Well, and related to that is something that I think they're becoming more educated. But I think that majority of people aren't as educated about the development of the euro dollar market. The euro dollar market, in other words, trade being conducted outside the United States in dollars. That was not mandated coming out of World War II. What was mandated was that the dollar would sit at the base of the monetary system and would be backed by gold. But nobody forced South Africa to trade with India in dollars.
Nope.
That developed over about a 50 or 60 year period, because the dollar was the cheapest, most efficient, and the most demanded. And so, to your point, if and when another currency becomes cheaper and more efficient and more demanded, it will chip away at the dollar. But so far, the dollar, the market keeps reinforcing the dollar. And that's, does the US enforce it? It absolutely enforces it. But the US military reinforcing the dollar is like the last step in the chain. There's a million political levers they can pull before it gets there. And then the market levers of just, when there's so much dollar debt out there. If dollars were to stop trading in the same amount that they are, that would mean that circulation would fall. And if circulation falls, but there's still all that debt, then you actually get into a credit contraction.
Yep.
And in a credit contraction, then dollars start to disappear. And what happens when dollars start to disappear? Then the price goes higher because you still have to pay the debt. And so there's all of these forces that reinforce the system as it is. And this is why I try to tell people that I am not saying that we are not going to transition from this system to another one.
Mm-mm.
You know, all world reserve currencies come to an end, all empires die. We all know
Mhm.
this. The transition from one to the other is very rarely peaceful. And so as we transition, or when we transition, whenever that is, it will probably be both economically volatile and militarily violent.
Yep.
And the idea that we're going to go from one to the other without one of those two things, if not both of them happening, in my opinion, while not impossible, is an extremely low probability event.
Agreed. No, you and I completely agree on this.
I think one thing I want to make sure I ask before,
Mhm.
I want to ask it now because it's on the tip of my tongue, and I don't want us to
Mhm.
forget, is I think that you and I sort of agree on the role of the dollar and what certain factions within the United States are doing in order to ensure the dollar stays, or the US stays kind of at the top of the geopolitical pyramid. I think we both agree that there are factions doing that. I'm not sure if we agree on the reasons,
Mm.
but it might be kind of interesting
But
to
again,
explore that.
what I'll say about that is that I and I say it all the time. I may be wrong about the reasons, but I'm going to give you my
Yeah, yeah,
reasons what I think is going on.
yeah, sure.
I think it's very clear that there is no profit in betting against the Federal Reserve wanting to cannibalize its own business. And the Federal Reserve works for the money center banks, mostly in New York, but in other places around the country. I also believe that there's factionalization within the Federal Reserve itself. I think New York is
Sure.
at war with San
Yep.
Francisco, has been for a
Sure.
long, long time, and it's now just out in the open with Jerome Powell representing New York and Janet Yellen representing San Francisco, and she happens to be at the Treasury Department, and he happens to be at the Federal Reserve. I happen to believe
Yep.
that most of the government of the Biden administration work for European colonial powers. I make that point abundantly fucking clear. And I think every
Yep.
day we see this, we see the geopolitical headlines and the counter moves that happen, the Fitch downgrade, all this stuff. To me, every bit of it just screams, what can the old European colonial powers do to hold on to their yoke over our system? And then there are the US sovereigntists who are sitting there going, you know what? No, all we're going to do is raise interest rates, and we're going to drain the world of dollars, drain the world of the excess leveraged dollars that exist around the world that do the worst of the dollar enslavement. We're going to get rid of those because that's what fuels all of this, rampant colonialism. You want to call it Marxism, call it colonialism, call it whatever ism you want. Doesn't really matter. It winds up being economic slavery for the rest of the world, which is what everybody who hates the dollar can see. The question is, who's actually doing it? Whose policy is this? Is it the United States as a capital U, capital S, or is it certain people within the United States who are globalists in their thinking and have been using the U.S. and the U.S. military and the U.S. State Department and the U.S. CIA as their, for lack of a better term, gendarme? Since we're talking about France being the being on the hot block right now, being the gendarme of this entire system. And that's the big question. And then you have to get back to, and this is why Brent, geopolitically, I'm in with the crowd 5 years ago that were anti-dollar, anti-U.S. empires, the Pepe Escobars, the Caitlin Johnstones, the Bernard over at Moon of Alabama, and the others. After a while, especially during COVID, it became very obvious to me that they only cared about that, and they didn't care about getting to the truth.
Yeah.
As far as at that point, I went on my anti-rants on that point. I literally called Caitlin Johnstone a soulless twat and a Chinese agent on Twitter. You can look it up. I never deleted the tweets. Okay.
Got it. I missed that one.
I'm sure you did. It was about 5 years ago.
But
my point is that once I got to that, once I started to get past my own disappointment with my own government, because that's where this stems from, right? A lot of this emotions around gold, around Bitcoin, around all is our profound disappointment with their own government and the society that they're paying into, and that's doing all these terrible things. But the question is it really us doing it? And are there people who finally looked up and said, you know what? Can't do it anymore. This is dumb. We're gonna kill ourselves if we keep this. We're gonna kill the golden goose if we do this. And I then politically, I just think that's the last point, and I'll turn the microphone back over. It's like, look, there are fundamental differences between Europeans and Americans. Americans, for the most part, are the Europeans who left Europe to get away from the tyrannical old system of Europe.
Right.
That's my family. I'm second generation Italian from New York. Right? My family, the Irish, the Italians, all of these people left old Europe. And they're like, we don't want to be Europeans anymore. We came over here to be Americans because America's better. I mean, nominally, there's many things in our past that we should be ashamed of, but we can't fix those things. All we can do is acknowledge them and move on. Right. So I think this is, I'll leave it there. I like to call them Eurotrash commies and just get right down to the brass tacks and move on.
Well, so I see things similarly. I don't know if we get there at the same way, but sure. I always start from one thing that I hold to be true, and that is that power is always taken, it's never given, or at least extremely rarely given. Like I actually think that when George Washington turned down being king of America, it's one of the most incredible moments in history. I have a hard time fathoming that it actually happened, but it did. It's incredible. He could have been king of America, and he didn't think that was the right thing to do, and he went back to Monticello and became one of the founding fathers, and it's incredible. But in general, that does not happen, right? I think the other historical example is the guy from Italy. What was his name? Cincinnatus did something similar in Italian history. But that's where I start. And so the idea to me that the U.S., I don't think the U.S. would mind a globalized world and the quote unquote one world government, so to speak, as long as they were the ones running that global world government or still sitting at the top of the pyramid.
That I would agree with as well.
I do not think that there are people in Washington. Well, I shouldn't take that back. There are people in Washington who would be happy to see China rise or Europe rise, but I don't think the people in power in Washington want to give away that power. I'm sure are some people that are just wanting to get rich off of it, but I don't think people, the deep state in Washington, I don't think wants to become a second city to Shanghai or Frankfurt or whoever it is, right? And so from that perspective, I think the U.S. will do whatever it needs to do to remain at the top of the mountain. The other thing is that I'm not sure that they want a one world government either, right? I think they're happy to just have the U.S. stay at the top and be the U.S. And part of it is because, like you said, when you really boil it down, like what you were just saying, like Americans, his heritage, we're just a bunch of cowboys, right? We went against the grain. We went, the ancestors came over, they braved the wilds, and they marched west and manifest destiny. And I'm not saying these were necessarily nice people. I mean, they slaughtered a lot of people on their way west, right? And but these people kind of earned, now maybe they didn't earn it in a moral way, but they earned their role at the top of the pyramid. And I don't think that they want to give that away. And I don't think we have another George Washington amongst us, and I don't think anybody it would be excited about the U.S. no longer being the top. And so I think that they will use every tool that they're available. And when I say every tool, I mean every tool available to stay at the top. And if they ever seriously get threatened, they will use the most diabolical means, the most destructive tools, and the most incendiary weapons to do that. And I hope I'm wrong. I really do, because I think it probably will come to that. But I don't see it playing out much of a different way. And my biggest fear is not the U.S. losing hegemony, to be honest. My biggest fear is that there's a war for hegemony and the U.S. comes out stronger than before and is no longer the American Republic, but the American Empire. Right. And I think that is more likely than we have this big hegemonic battle and the U.S. loses. And And I think whatever comes next is probably not better than what is right now, unfortunately.
Yeah, I mean, there's a number of ways of breaking that down. I'm not going to say that that's not one of my scenarios, right? In
Yeah.
my, laying out the scenarios, putting out the
Yeah.
probabilities, blah, blah,
Yep.
blah, blah. But when I hear things like coming from the chair of the FOMC saying there's room in the world for more than one reserve currency,
Yep.
that's Jerome Powell, senatorial, Senate testimony. There's room in the world for more than one reserve currency. Danielle DiMartino Booth brings up the point all the time. Why is Powell even there? You say there's no George Washingtons. I'm like, I don't know, dude. Like, Powell is a guy who's like walked away from tens of billions of dollars and, in private equity, and could have traded his, could have rode zero bound interest rates for the last 10 years.
Yep.
And made himself tens of billions of dollars in private equity. They don't call him private equity Powell for nothing. And yet here he is, the Federal Reserve, doing the thing and taking all the slings and arrows and doing exactly what he needs to do to break the old system. Because I think Powell rightly understands, and again, I'm not even painting him with a white hat. This is a gray hat argument, that Powell looks at this and says, look, we would like to continue doing the things the way we've been doing them, but we can't. There's no balance sheet room left. There's no possibility of us transitioning this system into something that's going to look like that. We have to give up some of what we have in order to not lose everything. There are very few people on Capitol Hill who understand, and in Wall Street, who at this point understand now that we can't stop the BRICS from decoupling somewhat from the U.S. and the West. Somewhat, not completely.
No. So okay. So,
and because of that, it's now it's the terms of the divorce that have not been settled yet. And I honestly think that the people you have to look at as the big losers in this at the table, again, I go back to Europe. When I map this out as a four-player game 100%. Of diplomacy, right? Four-player game of diplomacy, there's global South, China, Russia, the United States, and Europe. Europe is the weak man at the table. And they're the ones, 100%, and they're the ones with the biggest history and the biggest egos, and they're the ones that don't want to give it up. And they want their colonies back.
Okay, so 100. I'm glad we're having this call. This is clear. This is clarifying something, and I'll clarify my point of view.
Sure,
I agree with you on Powell. I think, nothing is certain, but I tend to agree with what you're saying. I think that he knows what he's doing. Mm-hmm. I think he knows that he might cause a recession here to do it, but I think he absolutely 100% knows that he will hurt everybody else in the process, right? Mm-hmm. Like, you saw it last year. He kept raising rates, and Europe's sovereign bond market needed to be bailed out. But Italy's sovereign bond market needed a bailout facility from the ECB. The Bank of Japan had to intervene to save both their currency and their bond market, their yield curve control. China was struggling like crazy to meet their not only their US dollar payments, but their to keep their real estate market internally from a deflationary bust. And so, and that was largely a function of the U.S. raising rates. So, I think Powell knows, and I think the U.S. in general, people in the U.S. government know that the dollar can, if needed, be used as a weapon. And, not just confiscating reserves, but U.S. monetary policy can be used as a weapon. So I agree with you that there are some who think that the system needs to change because it can't keep functioning. But I don't think they want to be a subservient. So let's say the BRICS do rise. Let's say let's say there is some multi-currency blocks that start to rise. I don't think the US will help set it up in a way that now the U.S. is on equal footing or lesser footing than those new blocks that are being formed.
Yeah, no, I would completely agree with that, and I think that's the fight that's going on here. And again, I keep going back to this. You brought up the point earlier about the eurodollar market. You said that the eurodollar market was not something that was mandated by anybody; that it was created as a market function based on the dollar. Right. And this is echoing Another guy that I have sincere issues with, which is Jeff Snyder, who started to educate everybody about the Eurodollar system, but has done so in a way that I think is obfuscatory of what the Eurodollar system's fundamental Achilles heel is, which is that in order for the Eurodollar system to exist the way it does today and have the power, or up until 3 years ago, the power that it's had today, it had to have a compliant and willing Federal Reserve to go along with it to fund the whole goddamn thing. Without a compliant and willing Federal Reserve to go continually take interest rates to the zero bound over the course of 2 generations and fill the U.S.'s balance sheet with a bunch of crap and hollow out our manufacturing and hollow out our economy and everything else without a bunch of globalist shitbags at the Federal Reserve destroying the friggin' country, i.e. Greenspan, Bernanke, and Yellen, then the Eurodollar system goes turbocharged and runs the whole damn thing. And the minute you get somebody up there going, you know what? No Eurodollars for you. I'm the soup Nazi. No Eurodollars for you. No, the whole thing ends. Yep. And that's where this is what it became very obvious to me that I said, back in June of 2021, I was still a reactionary, I hate the Fed kind of guy, right? I was like fully zero hedge kind of guy. And then, but I could see always that there was going to come a split between various, and I always had in my mind, it was going to be Eastern central banks versus Western central banks, fight it out. I've been saying that to myself since 2005, just in a big macro strategic sense. Now, but then things started coming together in the first half of 2021, where Powell started letting loose that he was not down with the Comintern. He was not down with destroying the global economy for climate change to bail out Christine Lagarde and the ECB, that there's room in the world for more than one reserve currency, that the whole point of central bank digital currencies was to do away with the commercial banking system and then put everybody on, and make them economic slaves to the central banks, right? George Soros is out there talking about consols and perpetual bonds and all of this stuff to deal with the Europeans' sovereign debt problem. And then Powell comes out at the June 16th meeting and raises the reverse repo rate 5 basis points above the Fed funds rate and pushes, over the course of 3 months, $2 trillion into the RRP facility to stave off negative nominal yields on the 1 month, on the 30-day U.S. Treasury bill.
It would have totally gone negative.
Right. And, but at the same time, it also drained the world of $2 trillion worth of base money.
Right.
Because that's $2 trillion that didn't hit the market. Well, Yellen was also getting ready to spend a bunch of money out of the Treasury, so he really offset about $1.3 trillion worth of, and that's base money. That's high-powered M0 for the global markets, is the way I like to look at it, which means that he probably drained $10 trillion of global M3.
It's all,
and that's all, in 3 months.
And that's why you saw what was happening. Yeah, I'm with you.
And then we saw the political fight to get him taken out of power. Lael Brainerd starts, leaks the friggin' insider trading trades in order to try and get rid of him. Biden plays fast and loose with his confirmation. Eventually, the FOMC ends the problem by electing him chair pro tem until his reconfirmation. And the minute Biden finally signs off on it, 2 weeks later, he raises interest rates, 1/4 point. And I'll be honest with you, Brent, I wrote about this as it was happening in real time. I saw it then. And when I saw it, I'm like, oh my God, is that what he's actually trying to do? And I said, somebody please pinch me that I'm not wrong. Because because this just sounds crazy. And yet here we are. I had a patron about a year ago trace Powell's genealogy. You ready?
What'd you come up with?
He's 8th generation American.
Really?
Back to the original colonies in Virginia. Wow, that guy's 8th generation American.
Interesting.
Okay,
well, you know,
and a Gentile. But I'll leave that conversation on the cutting room floor.
Well, the funny thing for me is that so I'll tell you, I'm not somebody. I actually, if people ask me all the time, well, Brent, what would you do if you were running it? Well, first of all, I'm not a believer in central banks. I think I'm a free market guy, but I'm also smart enough to know that central banks are basically always going to exist. As long as the state exists, there's going to be some government functionary, whether they call it a central bank or a ministry of finance, that's going to influence markets. So
Yep.
as much as I may not like it, I've kind of surrendered to the fact that, I have to deal with it. Now, is it possible to not have one? Sure. Who was the president, or not Jefferson? Who was it that fought against the central bank? Andrew
Jackson.
Jackson.
Hmm.
Jackson, right? So yeah, it's possible to have them, but it's just unlikely. And so I can go out there and shake my fist at the central bank all I want, but my time is better spent just trying to figure out what they're going to do, as opposed to
Exactly.
saying they shouldn't do it, right?
Right.
And so what's been interesting to me with Powell is I've always kind of liked him better than other central bankers,
Hmm.
not necessarily because I like central bankers, but I think he has been the most clearly spoken of what he was going to do, and without a bunch of mumbo jumbo and talking out of both sides of his mouth. And for the last, up until about 6 months ago, he kept saying he was going to do it. Literally nobody believed him, or
Right.
almost nobody believed it. And he just kept doing it, and he just kept doing it. And everybody said he can't do it more than one more time. And he just kept doing it. And he just kept doing
Hmm.
it. And I think when he started raising rates, I think it was for some of the reasons that you've laid out. I think he genuinely did want to get inflation under control, because governments want inflation, but they don't want double digit inflation,
Right.
because inflation at 5 or 6% helps them. Inflation at 15% makes it politically unviable for them to stay in office, and they get voted out. So, they, I think he wanted to get inflation down. So that was the main part. Um, and I think he was willing to cause a recession to do it.
Hmm.
Uh, because he also knew that even if the US went into recession, it would hurt everybody else even more, which it
Hmm.
did, which we already discussed. But what's been interesting to me is over the last 6 months, as he's gotten closer and closer to a potential soft landing, he has he's gotten less clearly spoken, in my opinion.
Hmm.
Or his words will still be clear, but his actions and his body language, and he'll hem and haw a little bit. He's not quite as certain, and he's a little bit more wishy-washy. And I think part of it is when he started, I don't think that he thought he could raise rates without causing a recession. And I think he just figured that's probably what will happen. But as
Right.
we've gotten closer to it, and the quote unquote Goldilocks soft landing has come into view, I think he's starting to think a little bit. I might actually be able to pull this off,
Right.
right?
Right.
And so I think he's started to like back off a little bit and build a little more wishy-washy, because it's almost like he can see the light at the end of the tunnel, and he's like, "Holy shit, I might actually do this."
Right. Right.
Now, I don't agree that he will. I still
Right.
think there's going to be a lot of problems, but
I
I but
agree.
I think that's a little bit what we've seen. The other thing I'll tell you is, last fall, last October, I had some meetings in Washington, D.C. with, well, let's just call them some, government employees, for lack of a better way of saying it, but who were in position to know, different things that were going on in different branches of government. And the reason I was there is because last September 30th, the VIX was at its highest point in 2 years. The dollar was at its highest point in 30 years. Equities were at their lowest point in 2 years. And in the previous week, the Bank of Japan, the Bank of England, the ECB, and the PBOC all had to intervene in their markets, right? We
Hmm.
were at kind of the crisis stage. And so I was and I was talking to these people, about my dollar views, and it was kind of made clear that Washington in general, let's just say, Congress, the Senate, House of Representatives, State
Hmm.
Department, people from all over the government were getting calls from all over the world, from both friend and foe. What the hell are you guys doing? You are absolutely killing us,
Yep.
right? And they were. I mean, the Fed was just absolutely killing the rest of the world. And I think that's a very good example of how, if they chose to do it, they can.
Hmm.
Whenever I've talked to people about this, they'll say, "Yeah, but Brent, this will cause a recession. It will cause, all these problems in the U.S." And I always say, "You're absolutely right. It will,
Hmm.
but it's going to hurt everybody else." And the way I kind of the analogy I've used is in The Godfather, when you remember when Sonny was like, "We're going to go to the mattresses." Like
Hmm.
when they're going to have a big fight. Well, when you have a big fight, you don't expect not to get hurt. Some of your guys are going to
Right.
die. You know that there's going to be losses on both sides, but the idea is that you're going to outlast the other side.
That's right.
And I think that's kind of the Fed's kind of mantra. Like, we can kind of get away with whatever we need to get away with, not in an absolute sense, but in a relative sense to the other central banks and the other countries.
No, agreed.
This will all end up coming back to bite the whole system, right? This can't go on forever,
right?
But it can go on for a very long time.
No, Volcker was staring at the same problem back in 1979. We had the balance sheet room then to do a lot of different things, to then come out of it quickly with a big spending program coming out of Reagan. We had the balance sheet room to do that. But I'm gonna throw this at you. But I agree with many of the things you just said. And what I'll say is this: there's going to be, about Powell's wishy-washiness. I think there are times when a central banker wants to be very, very clear. When he has no credibility, you tell him exactly what's going to happen. This is what I'm going to do. And then you go do it. And then you go do it. And then you go do it. And you go do it. And then I'd say around February, at the February meeting, is when he finally convinced everybody, oh, no, really, I'm serious. And now he can start to back off. Now, because let's just model this. I was thinking about this the other day when I was doing a podcast for one of my other gigs. And I said, think of it this way. The Fed, 2 years ago, could be playing. We'd be sitting at the Texas Hold'em table, right? And the Fed's got aces, bets like he's got aces, and no one believes him. And everybody runs into the pot, and it's a family pot, and eventually they lose the pot because his aces aren't good when there's 6 people in the pot, right? Okay. And then the ECB was allowed to, play 2-7 offsuit and deal off the bottom of the deck and get it and always get the 7 on the river that they needed to pair up or whatever they wanted, right? But at the same time, the Bank of Japan was playing with their cards face up on the table, so that everybody knew what the ECB, because the ECB is not the ECB, the BOJ, the Bank of Japan has been the most predictable of all central banks for 30 years.
Yep.
So there's your situation. Now, this year, Powell can front aces with every hand that comes out that gets dealt. Doesn't matter where he is, in the big blind or on the dealer button. He can be in, and the market is now listening to him. Lagarde is the one that has no credibility. Yeah. She keeps fronting that she's drawn to the runner inside straight draw. And the Bank of Japan on Friday last week finally turned their whole cards down. Ueda tweaked
first time in 20 years.
Tweaked yield curve control, didn't end it, which all he did is he finally introduced a little uncertainty into the Bank of Japan's behavior. And that little bit of uncertainty is a good thing, because now all of a sudden everybody's going,
well, what's funny about
JGB is not a one-way trade anymore. Maybe.
Well, what's funny about it is, so it was a week ago yesterday, I think. Yeah, because their meeting was last Friday, a week ago.
Right.
And on Thursday afternoon, it got, a headline or something hit that they're thinking about tweaking.
Right.
And the yen just shot up, right? It rallied like crazy. And then they came out on Friday and it was disappointing. They said, we're not tweaking it now, but we're probably going to, right? And so then the yen fell down a lot. And then over the weekend, I think it was Sunday night our time, they just on Friday had said, we're probably going to relax yield curve control. And then they come out this week and they bought bonds like crazy. They bought a ton of bonds this week, and the yen just got crushed again. Now today, with the jobs number, the yen is up a little bit today, but
I've been so busy this morning, I haven't had a chance to look at the jobs number yet.
It's extremely interesting, and what the thing that is fascinating to me about the Bank of Japan is that, to me, that is probably where the next crisis comes from. Now, if I had to say where the next one comes from, I would pick Japan, not because I don't see it in the US, not because I don't see it in Europe, not because I don't see it in China and Hong Kong and other places. But the thing that makes Japan so interesting to me is, regardless of which way they go, it has the potential to destabilize global markets. And here, I'll try to summarize it very quickly.
Oh yeah, no, I really want to hear. Go ahead.
Yeah. Okay. So, for people who, again, are not versed in all this, I'll try to make it as simple as possible. But essentially, governments are always they will always bail out the bond market because the bond market underlies the entire economy, and the bond market is how governments get their funding. Right? So the idea that they're going to let the bond market of a country fail, it's pretty low. The problem with always bailing out your bond market is it will kill your currency. Okay. So then if your currency starts to die, and if you start to implement policies that will help the currency, it will then start to hurt the bond market again. So the point being is if a country is unhealthy, the government will eventually have to choose between the currency and the bond market. They almost always choose the bond market. But and the reason this is the policies that save one kill the other, right? So now, for years and years and years, they've been saving the bond market. The reason it's interesting now is because they're talking about widening the yield curve, right? Or widening the band in which the yield curve control will operate. The reason that's a problem is because we all know what happened with US banks earlier this year. When interest rates started to rise and the banks had to start selling those bonds, and when people started pulling their money out of the banks, they had to sell those bonds at lower prices. Well, remember, Japan has been not just buying low yielding treasuries for years, they've been buying negative yielding treasuries for years. So as this yield curve band widens and interest rates actually start to rise in Japan, it has the potential to throw havoc into balance sheets all over Japan, Japanese insurance companies, Japanese banks, Japanese pension funds, et cetera, et cetera. Okay. So if they let that band widen too much, you have the potential to destabilize Japan's markets, which will then feed into other markets. The opposing thing is that if they do save them, if they widen this band, but it doesn't, but then the currency gets too strong, throws them into recession, and they have to go back to like bringing the bonds back down, then that kills the yen. If the yen continues to weaken, so if they choose the bond market, if they go back to yield curve control and they don't widen the band and they continue to buy bonds at the rate they have, then the yen continues to fall. If the yen continues to fall, it continues to put an immense amount of pressure on China, because China is their biggest regional competitor. So, when Japanese goods have gotten cheaper over the last year as their currency has fallen a lot, that puts pressure on China. So if the yen continues to fall, it puts more pressure on China, whose currency is rising versus the yen, putting pressure on their exports, which puts more deflationary pressure on their already deflationary economy. So again, I don't know which way Japan will ultimately go, whether they'll save the bond. I think that they'll save the bond market, sacrifice the yen. But if they sacrifice the bond market and save the yen, then it doesn't, regardless of which one wins out, it has the potential to be stabilizing for markets around the world.
Okay. Now do Europe. And you see that the numbers are 10 times worse because the Europeans were at negative 0.6% with as much as $12 trillion worth of negative yielding debt 5 years ago, or 2 years ago. And this is where I think Japan, everything you just said about Japan is an order of magnitude bigger for Europe and the ECB. The ECB can go bankrupt and the Bank of Japan and the Fed cannot. Because the ECB,
this is the issue, right? Is that Europe doesn't have a central governing authority. They've got one central bank, but they've got all these different nationalistic budgets, et cetera, et cetera. And this is why for the last 12 months, part of the reason that the dollar has come off and the euro has rallied over the last 9 months is that Powell has slowed his rate hikes, but he's continued rate hikes. But part of it is that the ECB has started to hike rates. The only reason that so a year ago they started raising rates. I think it was July. It was either July of August or August of last year. The thing that just kills me is that the day that they announced that they were finally going to raise rates for the first time in 10 years, they also announced the facility. I don't remember the name of it. Whatever the facility is.
I can tell you what it is. It's the transmission protection instrument. And it happened.
There you go.
It happened the day after Powell raised again 75 basis points.
Yeah.
Okay. It's all.
So he raised, but then the next day the ECB raised, and on the same day that the ECB raised, they launched this facility to buy to buy the Italian. So the only reason that the ECB has been able to raise rates over the last year is that they're driving with one foot on the gas and one foot on the brake.
Yep.
They're raising rates
Absolutely.
to tighten monetary policy, but at the same time they're buying Italian bonds, right? And to keep those yields from blowing out.
Oh, they're buying
Meantime,
German bonds as well because
oh
they're
yeah, yeah,
desperately trying
no,
to keep the German
absolutely,
Bund from breaking through 2.5%. Brent, we're doing this today, where it's
absolutely,
another damn day where the German
yep.
10-year German Bund is going to close above 2.5%. And what is Chrissy going to do this weekend to slam rates back down by 20 basis points? Because she's done it 6 times in the last
Yeah,
10
yeah.
months.
Well, in the meantime, Europe's got a war on its border. It's being deindustrialized. Businesses are leaving Europe and they're coming to the United States. This is something I've talked about a lot. And I actually think this is policy by the United States. I think the U.S. knows what they're doing. I think they're doing it on purpose. And they stand again. It's we don't mind having friends, but as long as those friends are lower than us, it's the way of the hegemon, right?
I would say it this way. It's like, look, I think it was all well and good until they launched freaking COVID to stop Powell from raising rates back. And I firmly believe that like COVID was launched at this point in order to get Powell back to the zero bound because he was getting ready to start raising rates in March of 2020. I'm dead serious when I say this, that there comes a point where the big freaking globalist push for power came and everybody looked around and went, this is what you guys are willing to do? Oh yeah, well, we're not doing this.
Yeah, yeah.
And like, there comes a point where even an asshole like Jamie Dimon over at JP Morgan just goes, no. Hold the freaking phone. I'm okay with, running debt slavery operations on, most of Africa and anybody else. And I'm all for it. And I'm all for, rivalry of China. I'm not all for killing grandma.
Yeah.
To not pay and then hand everything over and then hand my bank that JP Morgan Chase that I've worked my entire life to turn into the biggest financial institution in the world, and I'm going to turn it over to a bunch of German eugenicists. Really? We're going to do this?
Yeah,
this is where we are.
The thing that the way I think about COVID is that I actually think of it in the way that many people think of when the U.S. confiscated Russian assets last year. They weaponized the dollar, right?
Yep.
And many people have said this, while in the short term, this maybe it helped the U.S., this is going to blow back on the U.S. because now they've lost trust. Mm-hmm. Nobody will ever trust them again. They will, countries will look for alternative ways to save their wealth, et cetera, et cetera. And I don't disagree with that. But if we use that same analogy on COVID, I think initially it helped. It helped states all around the world, governments all around the world. They were able to institute all these policies as a result of COVID. And in the short term, they used the crisis, mm-hmm. to get many things done. But the subsequent, fallout is that I think that people around the world, if they ever try something like that. Oh, so before I go there, one of my friend Mike, I was in San Francisco at the time, and we were locked down, but you could still go outside and watch. So we would go on hikes and we would talk about COVID as it was happening, and we just could not believe the efficiency and the ease with which they just shut down the entire global economy. And right. At the time, people didn't really push back, right? It was, if you could remove your emotion from it, mm-hmm. It was really fascinating to watch. We just couldn't believe it. We just couldn't believe it. And it was scary. It was scary how quickly and easily they were able to do it. I think that quick and easy ability is out the window now because of what's happened since, right? So if anything like that were to be tried again, I think people would say, screw you, I'm not staying home. I'm not closing my business. I'm not, I'm not taking the jab. I'm not, putting on the mask. And I'm not going to get into whether they should or they shouldn't. I'm just saying, I don't think that people will comply the way they did last time. And so when it initially rolled out, I thought, okay, this is the playbook going forward. Every time the government needs to do something, they'll just roll out another pandemic or another health scare, whatever it is. But I no longer believe that, because I think the willingness to go along has been eroded.
And I think that you're completely correct. And yet they're still running the same script. I mean, the WHO and
I know they're trying, right?
They're still on
trying,
autopilot.
yeah.
Like it's like Giannis, like these people are like the way they described, like way Varoufakis used to describe Giannis Varoufakis, the former Greek finance minister, used to describe talking to the European Council about the European Commission about the Greek debt situation. He's like, you walked in with all my charts, I did the thing, and I explained everything to them. This is what we need to do, and then they looked at me as if I sung the Swedish national anthem, and then they just kept doing whatever it was they were going to do. Well, they front inevitability. I've said this about the EU for 8 years now. They front. The EU is inevitable. Everything about the global governance is inevitable. Just accept it, and it's going forward. And everybody's like, who are you people? Like, why do we listen to you anymore? And when they had all of the political and economic control over both Europe and the United States, they were able to do that. But they got political control of the United States. They lost it under Trump. And then they lost both political and economic control under Trump. And then they got it back when they put Biden in power, but they never got control of the Fed. And without the Fed, the whole thing collapses, because all that has to happen is let's just raise interest rates to 5.5%.
You kind of,
that doesn't work anymore.
I just realized it's 1:15, and I've got a call in about 15 minutes, so we've got to wrap this up fairly soon. But one thing we didn't get to talk about that would be fun to talk about sometime, and I think you kind of alluded to this a little bit, is one of the things I've talked to Danielle DeMartini Booth a little bit about it, talked to a couple other people about it. I certainly don't have it figured out, but I think one of the most underappreciated things right now is the potential for a huge battle between the Treasury and the Fed.
Oh, absolutely! It's been my base case thesis since Janet Yellen was appointed Treasury Secretary. Brent,
it dovetails with the CBDC. Whenever that comes out, I think there's going to be a big battle.
Absolutely, Brent. Why don't we call this part 1?
All right, perfect. Yeah.
And we'll do part 2 next week sometime, if you got time.
Sounds good.
All right, why don't we do that? And you go do your thing, and I'll do my thing, and because I got another call at 2:00 as well. So why don't we just go ahead and do that? We'll call this part 1. So everybody, we have an impromptu part 2 coming next week with Brent, and we'll do this again. Brent, it's been great talking to you, dude. It really has been. I'm really glad we did this. I'm glad we're able to, in many ways, clear up any misconceptions we may have had about each other. I think that's the fun part.
No,
it's all good.
I'm always happy to talk. Always happy to listen. Thanks for having me.
Thank you. You have a good day now. Well, that'll about wrap it up for episode 152 of the Gold, Goats, and Guns podcast. I really want to thank Brent for a great conversation, which I will definitely make sure that I schedule part 2 of real soon now. As always, you can follow my work at my blog over at tomluongo.me. You can follow me on Twitter at TFL1728. And of course, you can sign up for the Patreon at Patreon/Gold, Goats, and Guns, where I do a twice weekly market report tying together the headlines of the day with technical analysis of strategic markets like gold and silver, oil, Bitcoin, as well as the monthly Gold, Goats, and Guns newsletter with a full portfolio strategy for trying to make sense of this crazy world. So with that said, we're out for now. You guys be well. You take care. We'll talk soon. Keep your stick on the ice.